to the minute at 450. You're eyeing some key technical support levels. What more can you tell us?
Well, I think the commodity-based area of the Australian market has been under a fair bit of pressure, but today could be the day where we do start to see the material sector start to participate in the rally. Yesterday we saw the Australian market hitting the highest level that we've seen since September 2008, but really this rally has been driven by the financials. In the year to date, we're seeing stocks like ANZ up by 17%, CBA's up by 12%, we've seen NAB gaining 25% and Westpac up by 22%. In fact, through the global financial crisis, we saw the banks coming under pressure, but since the lows, we've seen banks with a massive rise. I mean, Commonwealth Bank's been one of the best with a rise of 155% since the lows that we saw during the global financial crisis, and that's compared to the Australian market, which has risen 60% in comparison. So Commonwealth Bank has more than doubled that performance of the Aussie market. So the banks have been the key area of strength for the market, while the commodity space has been an area of weakness. We have a look at the technicals for some of the key commodity stocks. This is BHP Billiton the last 2 years. We know that it failed a key resistance level at $39. It was unable to get above that, and we've really seen this pull back down to the $36 level. So watching this to see how deep the correction in BHP may be. If we have a look at Fortescue, a little bit different. This is a one-year chart of Fortescue. You can see at the moment that we are at a key support level at just around that $4.30 mark. We've bounced off it 3 times now. We continue to see strength in Fortescue. That does bode for better days in terms of Fortescue. But Wall Street last night, another record high for the Dow, and the gains were really driven by both the financial as well as the material stocks. So expecting those material stocks, those mining stocks, to have a good day today.
Watching across the market today?
I guess the funding in terms of Telstra getting €1 billion away at just 2.5%, that's extremely cheap funding. I mean, if we have a look at global bond yields, we saw them reaching a record low back in June last year, early June last year. But in terms of European yields, we saw a record low being hit in December last year, and they're very near those record lows of 1.7% at the moment. So very cheap global funding, great news for our corporates. And last year, in terms of the bond market over here, we saw record issuance, 19 issues over here at about $13.1 billion. So it was a record year, and I guess for big companies in Australia with good credit ratings, overseas markets are a very cheap area to raise money. We are watching that commodity space. Oil prices were a little bit higher, but we did see the oil inventory report out of the US, and there we did see inventories, crude inventories, up by 5.6 million barrels last week. So it does look like there's plenty of oil around. So that energy sector is going to be an interesting one, given that they've been underperforming. Of course, a number of companies also trading ex-dividend, including Leighton's, Northern Star, Oil Search, Panos, just to name a few. So expecting to see those stocks coming under pressure. But if they don't come under pressure, we actually see a gain. That's quite a bullish sign that they're able to overcome that dividend payment, and that they see buyers despite the stock trading without the dividend.